I'm Corbin Fraser, and welcome back to our weekly exploration of the cryptoverse, where we cover the news that matters most in this fast-moving space. Let's start off with a roundup of all of the political and regulatory landscape changes, with Donald Trump courting the United States' 50 million crypto holders, the SEC's surprising approval of Ethereum ETFs, and some Democrats crossing party lines in support of crypto-friendly policies, which many predicted that the Biden administration would feel the political pressure and take a less antagonistic approach to the whole Bitcoin and crypto industry. But a bit of a spoiler, it's not looking so good. Not looking so good at all. But first, a shout out. Our weekly news is brought to you by Verse. Go to verse.bitcoin.com to participate in Bitcoin.com's DeFi ecosystem and token, available on Ethereum and Polygon chains. Don't forget to get on the waitlist for your brand new V card, letting you spend Bitcoin and crypto at over 37 million merchants worldwide. On to the news. So those predictions about Biden, they were wrong. On Friday, the president of the United States vetoed the repeal of SAB 121, the SEC's staff accounting bulletin that effectively bans financial institutions in the U.S. from holding crypto on their balance sheets. So Congress had previously voted to repeal SAB 121, also known as Operation ChokePoint 2.0, which was being spearheaded by Elizabeth Warren herself. But the president chose to overrule Congress, stating in his veto memo that repealing SAB 121 would, quote, inappropriately constrain the SEC's ability to set forth appropriate guardrails and address future issues. Moving on to Senator Cynthia Lummis of Wyoming, known for her crypto-friendly stance. She called out the president's veto, saying, the SEC should never use staff accounting bulletins to determine policies, especially for industries it does not regulate. Yet this is the new norm under President Biden's leadership. Instead of listening to the will of the American people and reining in the SEC, President Biden doubled down on his administration's failed policies at the expense of American consumers. Yeah, fun stuff. Pundits rushed to declare Biden's veto of a massive political blunder that might actually cost him the whole election. So Galaxy Digital's Mike Novogratz, who's a staunch Democrat supporter, noted whoever is advising Biden needs to have his head examined. Polymarket, the Polygon-powered decentralized prediction market platform that allows users to trade on the outcome of real-world events using crypto, has the odds of Trump now winning at 54%. Interestingly, the odds increased in Trump's favor after Biden's SAB 121 vote. Additionally, Trump's conviction by a jury in New York on 34 charges in the so-called hush money case does not seem to have lowered the odds of him winning the election. So Polymarket election bet is currently valued at $143.76 million US dollars, making it the biggest prediction market for the US presidential election outcome. So actually on that note, little side note here, I've been watching Polymarket's rise over the last year, and I gotta say, it's cool to see the decentralized platform gaining traction. So congratulations to Polymarket team for raising $45 million in a Series B funding round led by Peter Thiel's venture capital firm. Very great to see. Very cool. Next, we have an important resolution in the case against Dapper Labs, a blockchain technology and digital collectibles company. So the Friel versus Dapper Labs case was a proposed class action lawsuit which claimed that Dapper Labs NBA Top Shot Moments NFTs were unregistered securities under federal law. So this lawsuit marked the first application of the Howey test to NFTs, potentially setting a precedent for the regulation of NFT projects moving forward globally. However, the case settled out of the court, implying that there wasn't enough evidence to claim the NFTs are actually securities. So Dapper Labs CEO declared victory on X, stating, after discovery, it was understood and agreed that the Flow blockchain is a decentralized public network and that digital collectibles like NBA Top Shots are not securities in the same way that trading cards are also not securities. So moving on, let's talk about the latest global geopolitical shifts and how they might affect crypto. But first, let me tell you about our friends over at Play Doge, who are helping us make the whole Bitcoin.com weekly update possible. So Play Doge is a mobile play-to-earn game that will combine the iconic Doge meme with a Tamagotchi-style virtual pet experience. Players will be able to care for their digital Doge, engage in classic 2D adventures, and earn play tokens, which will have in-game and market value. So with around 2.5 million USDT raised, the Play token pre-sale is just wrapping up, and depending on when you see this clip, you might still be able to get in on this sale. So developments on the game are already underway, so watch out for its release on the Play and App stores very shortly. You can embrace the 90s nostalgia with Play Doge. Back to the news. Respected economist and author of the best-selling book Currency Wars, Jim Rickards, has made a dire prediction. In a recent interview with ITM Trading, Rickards issued an alert about the possible collapse of the global clearance system if the US and EU go ahead with their plan to seize $300 billion in treasuries and assets held by the Russian Federation. So basically, Rickards is claiming the seizure of Russian assets would result in the collapse of Euroclear, which is a key player in the global payment settlement industry. Rickards claims that this would have cascading effects on the global settlement system, which could negatively affect global trade and have some long-lasting impact on the economy. In related news, it seems the United States and their weaponization of the US dollar to meet its geopolitical goals is kind of spilling over into crypto land. According to a report from Bloomberg, a growing number of Russian companies are turning to crypto to settle payments and protect themselves from potential secondary sanctions from Western countries. So at least 2 top metal producers now are transacting using USDT, the largest stablecoin in the crypto market. So as the G7 and EU mull more sanctions against alternatives for these operations, I'm expecting more companies like these to kind of grow and do more things like this, using USDT to bypass all the chaos. So the market seems to agree that Bitcoin and crypto will play a growing role in the financial markets as US dollar hegemony declines. This is evidenced by a 4th consecutive week of inflows in digital asset ETFs, pushing the total for May to an impressive $2 billion. Meanwhile, it seems that the world is waking up to Bitcoin and crypto. A new report by fintech company AAA reveals that global cryptocurrency ownership has surged to 562 million people, representing 6.8% of the world's population, which is up from 420 million back in 2023. So Asia has the largest share of crypto holders at 326.8 million, or nearly 60% of the global total. Cryptocurrency ownership in South America grew the fastest year over year, surging from 25.5 million to 55.2 million, a 116.5% increase. I'm looking at Canada here, 10% growth, 10% holder rate here in Canada. Brutal numbers, guys. What is this? What is this? You're embarrassing me. Get the puck in the net, guys. Come on. Unbelievable. Shifting gears, let's take a look at some of the innovations making news in the crypto world this week. Starting off, we have some long discussed use case for crypto that seems to finally be gaining some traction, which is tokenization of real world assets. Sometimes the crypto nerds are calling them RWAs, but real world assets is kind of a nice normie word for that. So this week, English second-tier football club Watford FC made headlines with their plan to tokenize 10% of the club, allowing investors and supporters to own a stake in the club. And importantly, this is the unique part here, they can earn dividends on that stake. So this offering expands upon previous football club token offerings, such as Bar token for FC Barcelona and the JUV token for Italian club Juventus. So with those tokens, holders could only get perks like special rewards and VIP access. But with Watford FC's token offering dividends, it represents a significant step forward in the real-world asset tokenization use case. Pretty cool stuff. Finally, our last story today, we have Starkware's announcement to scale Bitcoin using zero-knowledge technology. Known for its Ethereum scaling solutions, Starkware plans to enhance Bitcoin scalability through Starknet, leveraging zero-knowledge proofs, a method proven successful on Ethereum. This follows Bitcoin's recent Taproot upgrade, which prepared the blockchain for such advancements. Starkware CEO Eli Ben Sasson emphasized the importance of maintaining Bitcoin's core principles of trustlessness and decentralization while enabling mass use for global daily transactions. Pretty cool to see. In line with this, Starkware committed to a decentralized approach and announced a $1 million research fund to foster further innovation, aiming to make Bitcoin more accessible and functional as envisioned in its original white paper. So we're very excited to see how Starkware's vision progresses. You know, it would be amazing to see Bitcoin scale enough to actually be used for everyday peer-to-peer transactions once again. You know, this is something for people that got into Bitcoin early, we remember doing. Sadly, it hasn't really happened much, but it's great to see some innovation occurring in this space where folks are trying to bring it back. Return to tradition, right? Okay, so that's all for this week's crypto news roundup. Subscribe and follow our channels. Be sure you get all of our updates and insights into the ever-evolving world of crypto. Go grab a bag of Verse and join the Verse Lounge to hang out and interact with our team, including myself. I'll be hanging there. So that's it. Thanks for watching. Until next time, keep your wallet safe, your minds open. Do the retweet, the like, the share, you know. Do some shilling, guys. Help us out. See you later. See you guys.